Toronto condos are set to slide back into 2022 prices as the listings start to emerge and balloon. Oh yeah, I am seeing some challenges right now on the 416 Toronto Condo Market. And instead of the typical doom and gloom stuff, I kind of want to explain to you what I'm seeing, my thesis, and how I've been shaping a lot of this data as of late, and let you ultimately decide whether you agree with me or not that I think condo prices are set to slide maybe back to 2020, maybe even more. I don't know. You guys decide. Now, after watching this video, and if you agree with me and my thesis and all the data I'm putting in front of you, and you're kind of looking for an exit before it gets worse potentially, you can book a call with me using a link that's on the screen. It's right here. It's www.chatwithzen.com. And before you kind of freak out, just because I am putting my thesis online doesn't mean that the entire market is going to know or it's too late. I'm just a tiny little small fish in like the media landscape right now. Don't give me too much credit. And I don't think I will move the needle nor the market enough. But I do want to put this out there for anyone who is watching so that they can get ahead of the market before things start to turn. And a lot of what I'm saying is on the big headlines from like your big media outlets, right? And this is why I put this out there and I strive to do what's best for my clients. Simply click on a date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me. And then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. Yeah, this is not going to be a great video in regards to the condo, but let's just get the ball rolling and start with this bad boy right here. This chart is the average of the 416 condos, so like Southwest deals between 427 and like the edge of Scarborough, and it compares the average price every single month to the active listings, meaning the amount of listings at the end of the month. The correlation between these two is that when active listings are high, prices usually go down a little bit after. And that red line across all of it is 4,000 active listings. And I would personally say it's a fairly balanced condo market if you're around that time. And I've been using that 4,000 as a barometer for as long as I've been watching the condo market, which is over a decade now almost. And anything that's above it generally means that prices may stagnate or go up because there's a lot of stuff to buy. And you can see in the three examples where basically the orange line, active listings, is over the red line. Shortly after the inventory spike, the blue line, which is the average price, comes down. You see that? Those are the very obvious points that I can point out to you. But if you look very closely, a lot of the times the prices follow the active listings by like 2 or maybe 3 months. And this is what I was saying in the beginning of the video. It's not out there yet, but I think it's coming. And when active listings go up, prices come down. When active listings go down, prices go up. So it's an inverse correlation. The correlation here just varies in magnitude. That's all. And this has always been a challenge for the 416 condos because it started with the pandemic when nobody wanted to be in a condo because they thought you could catch the vid in the condo with the recirculating air. And then it obviously rebounded here when the rates were low and investors jumped in. But then when the rates went up, it kind of killed the investment thesis, and the investors essentially have been kind of hanging on with high rates, but the numbers don't make sense, like the math doesn't math. So then we got a burst of inventory last fall in 2023, and I sounded the alarm bells, and I was like, uh-oh, the active listings are really, really high. But it was hey, the year is over, and everybody terminated and started renting out, and I'm gonna wait for the spring. Here we are with a soft spring market, right, which is what I was concerned about, and it's maybe likely happening, and active listings are piling on. Now, here's the thing. I'm 100% sure a lot of condo investors can hold out for the rate cuts and maybe they'll try to exit then. But I can tell you, some will not be able to, and they'll start selling and set a new floor, right? So over here is the active listing count in all of GTA in the last decade. And you can see we're essentially highest point ever in April. And those two humps were 1, the pandemic, and 2, last fall when we had a giant burst of inventory. The inventory now is back and is continuing to grow. Now, last month, while we ended with 7,000 active condo listings in all of GTA, 70% of that is made up in like the 416. And if I were to map the current total amount of active condo listings right now on this map, it would literally be off the chart. Literally off the chart. It's this right here. It's at 9,500 right now. So now before you freak out, keep in mind, we will have sales. It's just, I don't think it's going to be too much because the market is soft, and that's what I'm seeing on the ground. And historically, we've averaged like 2,500 condo sales in May in the last decade. And I think this year is going to bring the average down. So assuming you get that kind of average year in sales, assuming like that's on the upside, I don't think we're going to be removing enough listings to bring us back down to a comfortable level, right? We're still going to be sitting above 7,000, being the highest in a decade, coming up into June, which is the start of the end of the spring market. And then we roll into trouble because the summer is usually pretty stagnant, even though condos trade 24/7 and 365, right? That's the problem. And here you can see that April had the highest amount of new listings in the Toronto area in a decade, and I would not be surprised if May was exactly the same thing. Meaning this, we have a bunch of new listings and they are outpacing the sales because nobody's buying, which means that the active listings, like the number of stuff available to buy at the end of the month, will continue to build, right? Now, let me add some more pain to this. This right here is the estimated condo completions for the next 3 years, give or take. It's a lot, like quite a lot. Now, I will say a lot of these completions will get pushed out like they always do because there's delays, but this is a good indicator of how much inventory is coming to the market, specifically the condo market in the near future, call it 3 to 4 years. I will say a lot of these will go into the rental market, but more on that later and why that may not be a bull case. A lot of these condo listings are from the 2018 to 2019 like pre-pandemic vintage, meaning we haven't seen many of those $1,500 plus per square foot condos come online yet. Those appraisal issues are still on the horizon, but some of these projects will probably be bailed out by blanket, appraisals, but that's a whole video for a different time, right? But it could be a nothing burger, it could be a big burger, right? We just don't know. Then we're going to look down the construction pipeline you can see over here, which kind of is like similar to the last chart, but you can see that there's a massive amount of condos relative to single family homes that are being built right now, because I've been saying this for a long time. You can't build land, but you can build up, which are condos, right? And this is why the condo market and the freehold market are really starting to separate, meaning that the condo market's going in one direction and the freehold market's moving into another direction. That's kind of the challenge. And that little rental line at the bottom, those are also kind of generally high risers that add to the rental pile. Now, the reason this inventory is a problem and where it's coming from is that it's likely from the investors with some like move up buyers sprinkled in here and there. Because if you look at this chart, it makes total sense, during the pandemic to own a condo. Because even if you were to break even when rates were at 2%, like mortgage rates, if you count the principal repayment onto kind of like how much money you're making, it made total sense, right? It was above zero. But since the massive rate hikes started, investors are essentially subsidizing tenants to live in their condos that they bought and they're investing in, because now the only way they're going to ever make money is by appreciation and speculation, because even if you add in the mortgage repayment component, it's not much because the interest rates are so high. And while rates coming down will definitely help with these numbers, the problem lies in this chart. The absorption rate for condos in the rental space is also coming down as well. What does this mean? It means that the number of condos that are being rented for right now are not renting, like they're not being leased, and the number of active rentals is increasing as well. Also, let's not forget, we have a lot of purpose-built rentals that I was talking about in that orange line here that are coming online as well. That's going to add on to that rental supply. Now, this red line is basically the 50% mark. And once it drops below that, rental rates will likely start coming down because we have too much rental supply at the current market. And this is happening because we have a flood of completions from those pre-constructions I was showing you, and a lot of them are just coming to the market right now, and they're putting big time pressure on the rental market because there's so much of them. If you imagine like a 40-story tower, that's like 400 units potentially coming online. And even if these investors got a blanket appraisal to survive this, they're now bleeding out the wazoo because their loan to value on their mortgage could be like over 100%. Meaning if they don't get a tenant in their ASAP, they're bleeding a lot of money at high rates and over 100% loan to value. This is exactly why, for the second time in a decade, you're seeing rental rates drop. The only time this happened was during the pandemic when everyone's like, oh my God, I can't live in a condo. So just put that into perspective. Now, anything in the yellow box, like I was saying, it means that the rental rates are dropping because it's below zero, and we're already seeing it now. And I'm seeing a lot of like rental listings that are, being rented out for less than what they rented for last year. And this is also exactly why I advise a lot of my clients in the condo space that don't increase your rents this year. Don't piss off the tenants, because if they go somewhere else, you're going to get lower rent and you have to pay for a new tenant. So yeah, this is basically like a giant poo-poo sandwich of data that does not look great for the Toronto condos in the near term. We most definitely have an abundance of supply right now. Then we also have an abundance of completions that's backing up that supply, that's coming online in the rental and the resale space, and that's going to be adding to both that supply that's already high. And then that supply is, like I was saying, is also flooding the rental market, which is putting pressure downwards on kind of the rents right now, making investors get a lower rent to not have vacancy, which has like a circular effect of, hey, if investors get their notice from their tenants, they're like, well, if I'm renting it for less than I did previously, why don't I cut my losses and I sell it and I add it to the resale inventory pile? And it's just a circular reference, right? It's just not good. It's just not good. Not to mention, the investors are not buying right now, which is reducing the demand. I would say maybe like 50, 60%, because the math doesn't math in this chart I showed you earlier, right? It makes no sense. Which means the only people who are buying these entry-level condos, right, call it your sub 600 square feet ones, are first-time home buyers who are mostly sidelined right now, waiting to see the actual rate cut and the madness of this inventory unfold before they pull the trigger and buy their first home, because they're very cautious. Plus, if they could score a great deal on the rentals right now because people are dropping the price, why not wait, right? So that's the mindset we're seeing with our clients and like boots on the ground. So yeah, it's not looking great for the Toronto condos at the moment. Will the rate cuts coming in the summer help? 100% it will. It'll bring some of the first-time home buyers back on the sideline. Maybe, give a little bit of the sellers a little bit of kind of like, hope that, prices will go back up. But will it be enough buyers to absorb all the inventory we have right now? I don't think so. So yeah, not great. But just because, a little bit more doom and gloomy in the data, it's not all bad, it's just bad right now, but there is a silver lining later on. So I believe this rental drop is probably just a blip. I think we'll get past it in a few months. And I suspect that when the students around August and September start moving in, they'll probably clear out some of the rental inventory. But the challenge is that if you look at this chart here, you can see that the new condo sales were anemic in the last 2 years, very little. This means that condo starts will trail about 18 months or so, which means that condo completions for like supply will trail by 5 to 6 years. This means that in 5 to 6 years, or like 2025 and onwards, we are going to get absolutely smoked by a shortage of condos like in the resale market. It's going to be really, really bad. And this right here is the condo build time delay, because it takes so long to put these skyscrapers in the sky. So for like long-term investors out there with a long-term horizon and you can survive until then, you'll be fine. The challenge is for the short term, for anyone who can't make it to say 2025 or 2026 and get a little bit of relief, let alone 2029, I really think you should crunch your own numbers and not just hope for the best, because I don't think things are going to get better for at least like a year. And, hope is never a great strategy anyways, right? So you let me know if you agree with my thesis. I've been, pondering this for like a few months now, or you think I'm kind of crazy, but let me know in the section below. Now, for anyone who is out there who is a condo investor and is in the thick of this, and after seeing this video, you are concerned about my thesis, and you're just really trying to figure out, whether it makes sense for you to hold on to your property or not, you could book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Really just to like talk about your unique situation and see what the timeline and equity position in your condo is, and to really determine how to survive so that you can reap the benefits of the short supply in say 2029, or does it make sense to liquidate now and there's like, an opportunity cost on that money, right? So the link is on the screen right here. It's www.chatwithzen.com to chat about your own personal situation. Hope this helps. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.